Heya Cryptozens. Tonight's show. Kwon's Terra Luna saga continues. Core Scientific lowers growth outlook. Yellen dismisses threat posed by stablecoins. It's 10 p.m. Pacific and the date is May the 12th, 2022. Welcome back to the Crypto Overnighter. I'm your host, Nick. The cover model for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. Now take a minute, go ahead and subscribe to the podcast now, because we're here at 10 p.m. every single night to bring you the crypto news analysis that you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. Welcome to day 7 of the collapse of the Luna Terra USD world as we knew it. I say day 7 because May 5th was the last time Luna looked like a solid buy. There have been a number of developments in the story today, but the market speaks first. So let's see. At the time of writing, according to CoinMarketCap, Luna is trading at $1.15 a piece. It's been fluctuating, so I wouldn't hold to that. I've seen it down to 2 cents and up to like $3. But it is down 99% in 24 hours. Market cap, bit over 770 million. That's down 53.56. Fully diluted market cap, almost 820 million. That's down 98.98%. Max supply. Well, the max supply just got blown right up, and we're going to talk about that in a bit. It's sitting at a bit over 89 billion Luna for the max supply. Circulating supply, according to CoinMarketCap, 57.51 billion. So, yeah, that's one of the things that happened. They blew up their max supply. For perspective, just a week ago, there was only 1 billion Luna. Now, I'm not saying it's intentional. I think it's a consequence of the protocol's attempts to restore the UST peg. Nonetheless, it's having a dilutive effect. Now, one of the other things that happened is they did stop the blockchain, which drew snickers from the rest of the crypto Twitterati. All jokes, comments, and complaints aside about whether they can stop a decentralized blockchain or not to the side, I get why they did it. Okay, so we just talked about how the supply of Luna greatly expanded so far during the crisis. This brings us to another potential problem, and it's a huge one. Because they blew up the number of coins in existence, that means that while the total of Luna tokens staked on validator nodes, that hasn't changed, the percentage has changed drastically. On top of that, this new population of Luna tokens are cheap. And sure, some people are just buying cheap Luna as something of a joke. Other people are sinking in a couple $100 in it or whatever, like it was a lottery ticket or something, just in case it blows back up. But there are other people out there, bad actors I would call them, and they might not be so innocent. They're the type to see all this cheap Luna laying around and think, oh, cheap governance tokens. You see, there's still about 2.4 billion UST locked down. Yeah, the piggy bank isn't empty just yet, because the price is near zero, not at zero. And that's just what's locked away in the Anchor protocol. There's also some $280 million locked up in other staking assets. Now, if you had the money, you could cheaply buy up 2/3 of the Luna supply, stake that to your own validators under your control. You do that, you control the network and everything in it. So that's why they stopped the blockchain, to prevent a governance attack. They needed to make sure at least 1/3 of Luna was staked under validators they controlled. So the validator community decided to bring the blockchain to a halt. Then they installed an emergency upgrade. Now, the purpose of this upgrade? Disable Luna delegation. So that took a couple hours. And then they brought it back online. But that's not all that happened today. Another thing, Gemini is restricting trading on the Luna and UST. In an email to customers, they said, quote, due to market conditions, we have switched trading for Luna and UST into limit-only mode. That means you can only place limit orders, not market orders. Bill Bardheit is the founder of Abra. Abra is a crypto exchange. He said they would stop trading in Luna if they needed to protect their customers. He said, quote, "We don't want users getting screwed on spreads for larger orders, so we're monitoring closely. We may turn off temporarily or permanently if the situation warrants." Now, Binance Exchange, they have stopped trading in their Luna Perpetuals future contract. They also warned that they would delist the Luna Tether pair if Luna's price dropped under half penny. Now, that was right before they rebooted the blockchain. I was just at Binance's site, and they did, in fact, delist Luna because it dropped below that half penny mark. They still have Terra USD, but not Luna. And I think the problem is the tick size. They had to keep adjusting the minimum size of transactions versus the major trading pairs, including fiat currencies like the euro and the pound, but also cryptocurrencies like Ether. And they had to do this because the price kept dropping below the minimum transaction value, and people couldn't cash out until it got readjusted. And I expect that they were doing this a lot. They have over 600 cryptocurrencies on their exchange, 600 of them. Luna managed to account for 8% of all the trades in the last 24 hours. Earlier this week, Binance stopped all Luna trading withdrawals, quote, "due to a high volume of pending withdrawal transactions." Okay, so it was another rough one today. Blood in the streets. Let's check the numbers. At the time of writing, the global crypto market cap is $1.22 trillion. That's down quite a bit from the $1.42 trillion of yesterday. It's down 2.38% in 24. The top 5 cryptos by market cap are Bitcoin up 0.72%, Ethereum down 5.42%, Tether, USDC, and Binance Coin up 0.09%. Core Scientific is a publicly traded Bitcoin miner. In fact, out of all the publicly traded Bitcoin miners, they have the highest hash rate, and they're concerned. They just lowered their 2022 outlook. And I get it. Bitcoin is trading below 30K for the first time in a while. So they followed up their disappointing first quarter earnings. They lowered their 2022 hash rate guidance. They're dropping it from 40 to 42 exahash per second down to 30 to 32. Now, the reason to do this is to adjust the amount of electricity that they're burning up to convert to Bitcoin. That controls the profits. Mike Levitt is their CEO, and he said, quote, "We would characterize it as an appropriately conservative approach to growth, making sure we have the money to do what we say we're going to do." And then he went on to say, "We remained very comfortable with our ability to internally fund our growth to approximately 1 gigawatt. Now, because Bitcoin miners and all the other proof-of-work miners, they're in a spot, and it is a tough spot. The price of goods and services, to include electricity, that's all going up. The price of Bitcoin and the crypto market in general, that's going down and quickly. So it looks to me like what they're doing is reducing the amount of electricity that they're converting to Bitcoin to just enough to keep the lights on, keep things going, and then wait for a better market condition to ramp production back up." Levitt said, quote, "Despite a very challenging environment, we are sufficiently capitalized to achieve our 2022 objectives, and we have the ability to exceed those objectives should it make sense to do so." Now, he also said that they're not going to be issuing equity in the current market, though they may still sell some of their coins. He said, "We will do everything to continue in our power to maintain a stable, strong financial position and continue to invest in our growth. We currently hold over 10,000 self-mined Bitcoins. That said, we have sold digital assets this year, and we expect that will continue to be the case." And that just seems to be the way of things these days. I remember the story last year was that miners were hodling their coin. Well, things have changed. Riot has started selling. Marathon said it might have to start. Now, the investors were happy, despite such a weak earnings call, even after missing first quarter estimates. Core's share prices rose sharply in the after-hours trading. All right. NFTs. The global NFT market cap is up over 10.57 billion. Sales volume is down 1.83% in 24 hours. According to CoinMarketCap, the top 5 NFT collections by sales volume are Other Deed, followed by Azuki, Bored Apes, Mutant Apes, and Doodles. Now keep in mind, these are very volatile prices, so do your own research. So Janet Yellen might have done us a solid today, and I'll tell you why we might owe the Treasury Secretary one. But first, we need to talk about Tether. Tether doesn't have the best of reputations lately. They're constantly under fire for this reason or that. And it seems like its history, combined with the general fear and panic around stablecoins coming from Terra UST, that might have added to it a bit. Because Tether fluctuated. Stablecoins, by their very nature, aren't supposed to fluctuate. They're supposed to stay pegged to some fiat standard, $1 in this case. Well, yesterday it dropped to 95 cents. That said, this isn't Tether's first depegging. So as I said, it dropped to 95 cents. It's still sitting at 99.76 as I look at it. Other stablecoins, they were trading in at over $1, at least for a little while. USDC, DAI, BUSD, they were all trading above $1. So what that tells me is that people were getting out of UST and USDT, maybe because of the name, and going to other stablecoins. Now, for Tether's part, their chief technology officer, Paolo Ardolini, he made an announcement. He said Tether can weather this current market climate. He said, quote, Tether has maintained its stability through multiple black swan events and highly volatile market conditions. And even in its darkest days, Tether has never refused redemption. Also, just to make sure, they're moving 1 billion Tether from the Tron blockchain to Ethereum, presumably where it's needed most. They're also moving 20 million from Tron to Avalanche. Even with the depeg event, they were still redeeming $1 for 1 Tether, just as it's supposed to be when it works. However, it's when it doesn't work that concerns Janet Yellen, but not quite as much as we might have thought. Now, according to her, this stablecoin market isn't so big that it's a danger to the country's financial stability. They're just not big enough that a Terra USD or a Tether coming apart at the seams is a threat, not at their scale. Now, she was in a hearing about the Financial Stability Oversight Council's annual report to Congress. And that's where she kind of hinted at, even with UST cratering, even with Tether, the largest stablecoin by market cap, that one depegging, still not enough to create a, quote, real threat to financial stability. She went on to cite a November report, and that report came from the President's Working Group on Financial Markets. And it said the Oversight Council was already currently analyzing, quote, potential financial stability risks where digital assets are concerned. She was also talking about digital assets when she said, quote, they're growing very rapidly. They present the same kind of risks that we have known for centuries in connection with bank runs. Now, some people are going to read into something that she said. They're going to get excited because she said that a central U.S. bank digital currency could have, quote, a significant impact on the structure of financial intermediation. Even though there are potentially fewer risks with stablecoins, she isn't saying that they'll have a negative impact. She's just saying that a U.S. CBDC is going to have an impact, a significant one. So that's why I say don't read too much into it. Now, her comments came after she addressed the Senate Banking Committee on Tuesday. It was there that she asked lawmakers to come up with a, quote, consistent federal framework on stablecoins to address risks. And that's going to do it for us tonight. Thank you so much for joining us. I really do appreciate it. If you enjoyed tonight's show, like, comment, and subscribe. Give us a glowing review. Do you have questions or comments? Reach out and let us know. The email address is nick@cryptoovernighter.com. That's nick@cryptoovernighter.com. Oh, and check out my other podcast, Crypto in 5 Minutes. We have 41 educational podcasts, 5 minutes to explain one concept in crypto. And as always, may peace